Welcome to Gold Silver Pros.
Hey everyone, this is Rob Kientz with 𝘿𝙄𝙎𝘾𝙊𝙈, and I have a returning guest of the program. You've seen him many times on the program, coming to conferences and speaking to us about the mining sector and everything gold and silver. It is Jerry Huang, who's the CFO of Impact Silver. Jerry, how are you doing today?
Very good, Rob. Always a pleasure to see you.
Well, thanks for joining the program. I know we last had you guys on about a year ago to get an update on what was going on with Impact Silver. I know that you guys have a lot of projects and a lot going on. Can you just give us an update as to what the last year has been like for you guys?
Yeah, definitely, Rob. Thanks for that. So we were talking before on the preamble. It's been about a year and a bit since Fred, our CEO, came on in February of 2022. Definitely a rosier market. Silver continues to be very strong along with gold. Obviously, we've seen the start of the Ukraine war, Russian war right about then. So it's been about a year and a half since then, a very unfortunate global incident. It's still ongoing. And that's obviously caused a lot of flight to safety for the global capital market, as expected. Gold and silver has continued to do very well. And obviously, we've been able to take advantage of that opportunity in the market to identify mines. So I think beginning of Q3 last year, we started looking at potential deals. We have always been for years. So in addition to our existing operation, which Rob, you visited as a Copan, the 𝘿𝙄𝙎𝘾𝙆𝙎 complex, we continue to produce there. We're actually in the process of ramping that up. So that's serving as a baseline, if you will. About 600, 700,000 ounces of pure silver per year. We continue to be one of the purest silver miners out there, with 90% of our revenue to pure silver. We have a very strong balance sheet, as we've always had. It's obviously a very shaky market. So in addition to being a developer and explorer, we've always kept a very strong balance sheet, minimal debt or zero long-term liability. We had about 16 million in cash end of year last year, and no long-term debt. We've since then actually also took the opportunity in April of this year to actually add 9 million to that. So we're very fortunate to have that just in our balance sheet to be able to expand operations and look at deals. Speaking of deals, the major asset we've announced, and this is probably the newest acquisition in, I would say, over 10 years. At Impact, it's the Plomosas asset. It's one of the purest silver assets, zinc assets in Mexico. Right there, you have the screen share. Thank you for that, Rob. So again, this asset comes with a 150 tons per day mill. It's permitted. It was a past producer from an Australian firm called Consolidated Zinc. So this transaction was announced in February of this year. We did essentially a concurrent financing. You'll see the ongoing work that's been implemented to restart production. I would say the timeline there would be loosely Q3, Q4 of 2023. So it'll be very, very quick. It is one of the current highest grade zinc mines in South America or even globally. We have a comp chart in our latest corporate presentation. It grades at over 13% zinc, nearly 15% plus with silver credits. And just to put that in perspective, most major zinc mines of Trevali's and Glencore's and Teck of the world are running maybe 2 to 3%. So you're talking about something that's north of 5 times, 6 times the grade. Obviously, the size isn't quite there in terms of the throughput. But we're obviously looking at the possible potential of expanding that through exploration. And that's really the upside in having a strong balance sheet like Impact to be able to explore and develop. And the benefit of having that ready in past production in the last 2 years, very recently shut down, is that it wouldn't take very much for us to restart that as well. So that's the kind of the new and most major exciting project in terms of impact. You'll see that it's actually not near our project. So if you remember landing in Mexico City and driving down maybe 3 hours south of Mexico City to the Guadalupe and the Cepure processing plant, this is actually in Chihuahua, so northern Mexico, a very mining-friendly district. If you kind of rotate through a few of the pages on the presentation, you'll see that this actually area is surrounded by some of the biggest silver mines in our sector. So the Mag Silver, the 𝘿𝙄𝙎𝘾𝙆𝙎 and and several of the larger zinc silver deposits are all in vicinities. There's Meg Silver, there's Silver Corp, there's several of the larger silver assets in the district. So we're certainly surrounded by majors. Again, there's about 13, 14 million tons of zinc equivalent as it is. So Pinellas, you see that Plomosas assets right there. Grupo Mexico, Pinellas, Gold, the Parral assets nearby. Grupo Mexico, Newmont, I didn't mention. St. Barbara, which is now part of Grupo Mexico. So no shortage of large assets in the Cinco de Mayo, as I mentioned, with Mag Silver. The benefit in being such a popular area, there's no shortage of labor talent and infrastructure, and of course access to engineering. Then the payment term, I believe, was really fair for Impact. We essentially bought it at the bottom of the market, like Q3, Q4 last year, and really finalized the deal terms for $6 million US, half cash, half shares, and for an asset that's easily worth, with about 35 million spent the last few years, we think it's a fairly reasonable deal. There is a 12% NSR, but we believe, obviously, with the startup and delays and everything else, there wouldn't be very much net profit in the first little while anyway. So, and we would probably be able to buy that back. The type of deposit this is, Rob, is a CRD. Now, some of the biggest silver assets in the world, you're probably familiar with Mag Silver, the Juanicipio, the Cinco de Mayo. They are a carbonate replacement deposit. So this is something that the Reina Silver and Dr. Peter McGalls of the world dedicate their life in. So there's certainly a lot more to this asset than just what we know. But nice to start off with a decent resource. What that means in terms of size, I'll just put that in context. It'll be probably in the 250,000 to 500,000 ounce silver a year. So material to us, it's too small to move the needle for a lot of our peer group, but exciting nonetheless, because it's really the first significant growth with Impact that we've probably seen in the last 7-8 years.
Yeah, and talk to us about why you went after that particular mine. It has zinc in it. What interested you about that versus maybe some of the other properties you have? Was that filling a gap in something you didn't have, or was it just that opportunity that you saw and you took it?
I think it's a combination of things, Rob. That's a great question. I think the right time, right place, the price tag works out well. Consolidated Zinc was in a tough spot. They were really pivoting to the lithium boom. They're listed on ASX, so didn't have as many access to capital, and the project was really capital starved. They were producing, they were making a little bit of money and breaking even, but they didn't put money back in. So very similar to the asset that we have currently called the Zacualpan that we bought back in 2005. It was a very similar situation. They were making money hand to mouth, but they weren't putting money back in. Like any other business, you have to obviously continue to put money back in. You can't just take money back out. So that's one aspect. The other aspect, obviously, is the potential of the size, because they haven't reinvested. Really, you didn't know the exploration potential. It's a massive large cardiac carbonate replacement trend, 13-kilometer long. Just because they have one occurrence, which is one zinc pipe, they focus a resource on 13% plus. Doesn't mean there's no more. And the likelihood of these deposit is that they do stretch for miles. So that, and you saw that map earlier, that we are surrounded by some of the biggest silver mines in the world. So there's no reason why it's limited, other than the fact that they were limited by budget. So cash cost, the price tag, the size potential is an existing operation. So we saved that permitting time. We didn't get into it too much, but obviously there's been some political changes in Mexico. So, we're not dealing with permitting risk and any sort of political risk in buying something that was a past producer or very recently producer. So, the multitude of aspects really make this a fairly attractive deal for us, Rob.
Okay. And update us on the other existing projects you already had before. You guys were, you had a bunch of different projects that you were running. We went down there a couple of years ago and looked at it, and
yeah,
it was a great visit. Lots of different sites. How are those going, and how's your production from them?
Definitely. So the production has largely been fairly flat, I'll be honest. So since COVID, we were actually sizing down the production to about 400 tons per day versus a 540 tons per day maximum capacity. So this year and very recently, we're actually in the process of scaling that back up. So we'll be looking at about 15 to 20% bump in production output at the Guadalupe mill. Obviously, inflation and personnel shortages are a common theme throughout a lot of our peer groups. So we're fortunate to even be close to break even on net loss basis, and slight loss or break even on EBITDA. At the Guadalupe, we continue to drill off tangents and some surrounding areas. We've actually been drilling. So yeah, there you go. So you can kind of see the rest of 2022 was right in line, plus or minus 3% on an annualized basis. And just to explain that bump in 2015 through 17, that was when we were in a bit of a boom of the market. If you remember 2015 and 16,
yeah,
we're at the absolute bottom of the market and very quickly shot back up. I think most of our peer groups that year were up on average probably 500 or 600%. And back then we had the mentality that, hey, I think ounces matter, size matter. We wanted to get to 1 million ounces a year. And as a result, the focus wasn't on net profit or net income for better description, and rather than just let's build on size and worry about profit later. So during the tougher markets subsequent to 2018 through 2020, the focus was really, hey, let's make money first and let's cut down on costs and not worry so much about ounces. So as the market got better, and obviously we're looking at $24, $25 an ounce silver, which it's muted. It's not quite 30, not quite 28 from back in April when it shot back up, but still very reasonable, in terms of sustaining costs and break-even costs, marginal cost per ounce. We're easily averaging in the low 20s. So definitely still enough margin for us. And we're still very comfortable in this range, despite recently inflation. And really on the Guadalupe, it's kind of our steady home front. We're looking at increasing the production there, and you're seeing kind of that four chart there: the Guadalupe, the 𝘿𝙁𝙁, the 𝘬𝙁, We've now also implemented mill feed from 𝘿𝙁𝙁, which is actually open pit. I think Rob, you remember seeing where that photo was taken. It's a high grade nearly 180 plus gram per ton open pit ore feed, whereas the other four or the three are larger underground assets at generally higher grade but higher cost as a trade-off. The Guadalupe is now 55% of Q3, Q4 production. That's the one we went down in the shaft. So if you recall, Rob, the shaft has now been fully rebuilt and repaired, and that saves a lot of time. Some of the other ones that we went down to, the 𝘬𝙁, for example, you'll see these 5-ton, 10-ton mining scoop tramps. And essentially, these are very narrow carts with a large trucking scoop in the front. So they would be driving half an hour back up to the surface, going down 200 meters or about 12, 13 levels at about 12 feet per level in terms of depth, right? So we're mining down to 200, 300 feet generally, and you can imagine these things they're not going 60 miles an hour. They're going maybe 5 or 7 miles an hour for safety, right? So and they run off diesel. So obviously anything you can do to improve speed and efficiency in getting the ore to the ground, Rob, once we identify the veins, that's crucial in any operation.
Yeah, and you guys, a lot of that district down there, there's some thin vein mining. There's also, I remember when I was down there, we saw some stuff literally falling off of a wall. So you've got a mix of different types of deposit. How do you guys manage all that?
Yeah, we have a very extensive GIS database system. You remember seeing the geologist's office. We have a large land package. So even though the production size may not seem very big, it's been very much systematically cataloged in the last 14 years, and certainly 17 years plus that we've been mining down there. So there's never been a shortage of ore. I think the investment community challenge has always been with Impact is, how do we know you're not going to run out of ore next month, right? I mean, and I think at this point, 17 years on, there's less of a concern. But believe me, when Fred and the directors were pitching this deal to Sprott and Fraser McKenzie early on in 2005, it was really like, hey, take my word for it. There's more silver in the hills, literally, right? Because this area this is the second oldest mining district in Mexico, period, right? Like it is a very illustrious area. We're about 25 kilometers north of Taxco, which is synonymous with Mexico silver. Like that's where the Mexican government has built out a silver display, museum, touristy area. Again, to the state, Taxco is still being explored by one of the largest mining groups in Mexico called Group Mexico, and that's just south of us. So, and we have a JV partner with Pantera Silver. They're looking to explore the Nuevo Taxco area, the new Taxco. So you'll see that panorama, silver capital of the world. That's a page actually from Wikipedia. Really explaining the size and the fame of the silver capital. This area was known to have had produced, obviously loosely documented, up to 300 plus million ounces historically, right? So it's a well-known area. It's very central to Mexico, very access friendly. And you drove in a truck with us. It's pay 5 ways the whole way across from Mexico City. Doesn't really get much better than that, right? Like it's a safe area, central. We're in the Estado de Mexico, which is really the central state. That's where the president goes for vacation. So it's in such a high visibility area that, but again, we're also not near a city. So there's no real huge environmental concerns and permitting issues. When you're too close, sometimes it's good and bad. There are other mines that are maybe closer to Mexico City, within half an hour south of Mexico City, that gets a bit more attention in that regard. So we're about 3 hours. It's not quite super far, but it's far enough that we're out of the way, but we're still in the prime area of mining Mexico for silver. And lastly, really, we have tremendous local support, right? We have over 230 staff. The facility was not built by us, right? That's kind of very similar in a way to back to our new acquisition. It was built by a major. The Plomosas complex was also operated by 𝘿𝙄𝙎𝘾𝙄𝙎, which is a large Mexican mid-cap miner. So similar to the Guadalupe, you've seen the facility. It's got to be 30, 40 houses on site, very large infrastructure. And that would easily cost 30, 40 million to replicate in today's dollar, if not more, adjusted for inflation, right? So we like scenarios like that where most of the capex is spent already. We're just really making incremental improvements to it.
Yeah. So what do you think is going to happen for the remainder of the year? What plans do you guys have in terms of operations? I know you've got Plomosas that you have to consider. What's your general direction for the rest of the year? Yeah,
so so I would say a slight bump up in status quo on the Guadalupe, ongoing exploration on an annualized basis, because we're self-funded in terms of revenue and ongoing cash flow, break-even cash flow on production, and slight break-even or slight loss on net income. We can't afford to drill out. We're not relying on the market. Back to the market right now, it's absolute chaos in the small cap space. Very difficult for junior explorers, especially, and it's really a tale of two worlds, right? You have that dichotomy of you're really struggling junior miners trying to raise $500,000, $1 million to drill a few thousand meters, and then you have the majors, which there's a ton and the barrage of M&As, right? The biggest copper miners are merging. There's Goldcorp and Newmont a few years back. So the largest guys are merging and talking about M&A. They're buying up mid-cap tiers companies at very low discounts, really. Or very low premiums. So there's really what I would describe as a hollowing out. There's not a lot of in betweens. You have really small companies, and you have a few of those really large ones. And the large ones in the last 5 years, through the pandemic, with the rise of base metals and precious metals, Rob, to new highs, they've really cleaned up the balance sheet, right? During the low interest rate era, they've been able to clean up their financial statements. They paid off loans. They got secure long-term debt at low rates that weren't floating rates. And they're now majorly cashed up, but they really have not been pulling triggers yet. So I think it's an optimal place for us in terms of positioning, with over 23, 24 million in cash and no debt. Our market cap fluctuated between 40 to 60 or even 70 at one point. And really, we can be opportunistic. We can drill. We're looking to expand the Plomosas asset, which will obviously add, I would say, about 20, 30% to our revenue immediately in the next 12 months. And that, I think that'll be seen as a good thing. It's really a sign of growth after really, I would say, 6, 7 years of fairly stable operations. And along that, every quarter or two, we'll sprinkle in these high-grade results to kind of remind, hey, my people that we even at Guadalupe, we have 21,000 hectares of very high-grade land that we've cataloged, we've only scratched the surface on. We're only using about 3% of our land package, right? So by no means have we exhausted exploration development potential at 𝘿𝙄𝙎𝘾𝙆𝙎 just because we bought a new asset. Obviously, we're going to focus a little bit on that, on the new asset, because it is near-term cash flow. But lastly, we also have a third project called 𝘿𝙬𝙎𝑃𝑢𝑟ate, which I think the last 2 years we've been working on, and we've been looking at different ways to cut costs there. That's the volcanic massive silver asset further down south. It's probably another 2 hours south of the 𝘿𝙄𝙎𝑃𝑢𝑟ate area. We put in about 12 million on that asset, building that from scratch. So that was actually mostly the impact in 2010, 2011. And that asset, we've tried out dense media separation. We tried out trial engineering on that. We actually put that in production back in 2011, and that was mothballed since then. And anytime silver crosses 24, 25, people start asking about that, right? So there's a resource there. It's a lot more homogeneous. You can kind of see the pilot plant there, 200 tons per day. It does need a right-sized plant, which means it's got to be at least 500 plus to 1,000 tons per day to make sense. It is lower grade. It's about 70 to 85 gram per ton lead and zinc. You're looking at anywhere from 5 to 10 million ounces of silver equivalent. It's definitely more half silver, half lead zinc. But low strip ratio, fully engineered. There's a PEA out on the asset, and there's multiple lengths, right? This is a different type of deposit than the thin, high-grade narrow veins that we chase underground. This is predominantly at surface, less than 50 meters below surface. And with any sort of volcanic and massive sulfide lens, Rob, there's occurrences, right? This is only one lens, so people might scoff at, hey, this is only 5 to 10 million ounces. You need to be 50. These are kind of the popular mantra that people kind of talk about in junior mining world. You need to be 50 million ounces of silver. You need to be 100 million ounces of silver, right? I think with Impact and a lot of our investors, that they rather see us produce 1 million ounces a year and pull out ore every month rather than proving that we have something in the ground. But when you pull it out, like half is missing, 30% is missing, right? So on an ongoing basis, the longer we build this track record of credibility, selling silver to the Trafigura, the Glencore, and the Samsung of the world, I think that means a lot more than just arm waving and building a resource, right? And a lot of these resources, not to discredit some of the sector peers, they are generally more of an optionality play, right? Because they don't make money right now, right? They're not breaking even. It's really a play on the speculation that silver, that we all believe, will go past 25, 35, 40, 45 plus, and well-deserved well-deservedly, because there is a boom in solar panels, there is a boom in green tech. We all know silver market is heavily manipulated from your channels and many of our friends on YouTube and media. But until then, we have to at least break even. We're going to sustain our operations without diluting the share structure too much, and that gives us staying power. And when the market does come, as it did in April, you saw our stock almost double, right? Like it does trickle down from the majors, the Hecla, the Silvercorp, the First Majestics, down to the mid-tier, and then later in the euphoria cycle, then it goes to the Explorco. So I think we're strategically positioned, and we're excited.
Yeah, and I'd like to point out there aren't a ton of primary silver miners in the world. There's pretty much a handful of well-known ones. And so it's easy, I think, for the market, especially on gold companies, to say you have a certain amount of ounces, you have a certain amount of reserves, and then we're going to value you, net asset value. But in silver, I look at it just a tad differently, because most silver ever produced is a byproduct. So if you have a primary silver mine and you're producing silver, to me, you're way ahead of most people. And a lot of the people in Mexico, there are a lot of mines that are like they're re-looking at older projects and they're drilling them out, and it's great, but they're not producing yet. And there's a ton of those in Mexico right now. Along that gold silver belt. Well, they're looking for resource, but they're not producing. But you guys have been producing for a very, very long time.
That's right.
And as a credit, like you said, you've been going strong for about 17 years now, and you have 3 companies that are buying your output. And those companies wouldn't buy your output unless they know that you're going to have the output. So it's more of a situation where you guys have consistently produced. And when I went down there, you had so many different projects you can work. It's not 1 or 2. You guys have a lot. So you can really pick and choose which ones you work. And it seems as though those resources are going to be there for a very, very long time. last question, just talk a little bit about the longevity you think of this district, given, all the resources that you have and all the mine workings you've been studying.
Yeah, for sure. And just maybe really quickly go to that point. I'll do a quick screen share as well, just to show you what you meant and what kind of Rob drove point earlier. This is literally the largest sector. This is the silver pages from BMO. Quarterly, they do an amazing job. And this drives the point home. Most of the biggest silver names that we know in the sector are not silver miners anymore. Like it's far more efficient to produce an ounce of gold and convert that at 85-to-1 basis, as you know, right? Than to produce 1 million ounces of silver and then convert that to, it's 800 ounces of gold. Right? So you can kind of see First Majestic is 37% silver. Like most of these guys are not pure silver miners anymore. They're primarily gold miners, and then they convert it on a silver equivalent basis, 85-to-1, right? 1 million ounces of gold, or 100,000 ounces of gold, is 1 million ounces of silver. It sounds a lot better, right? So that's kind of the reality of the world right now, and it's very hard to get size in terms of pure silver. So Aya is a very good example of that. It's a rare one. It's in Europe. Endeavor is 55%. Fortuna is 20%, right? Hochschild is 41. So I'm not kidding. The weighted average of the large cap guys is less than 40. The smaller you go, the heavier weighting it is. So to kind of discuss the point earlier on bond potential, like I said earlier, we have explored maybe 3% of our land package on 21,000 hectares. We acquired the Planosa, and that's 1,400 plus hectares as well. So we're only just getting started. We're really confined by time and resource and personnel, and we're obviously slowly working through that. But we're excited, and again, I think the history's on our side that we've been doing this long enough. So if again, investors can definitely get that assurance that we have a baseline of running this at this current run rate. Silver goes up, we get obviously bumped up very quickly because of our 90% pure silver exposure, and beyond that, it's really gravy on top. You're really buying a company that's nearly half, at some point, half in cash, half the market cap in cash, and you're getting both that explorer, developer, and producer all in one stock.
Yeah, and it's a very interesting and different company, which is why I like it. You get everything at one time, and when you go visit and look at the project, it's very fascinating. Last point I want to make before we hop off, because I know you have another call to go to. When we went out there and we talked with, I think we went out there with the Equity Guru guys a couple of years ago, and we talked with the local people, and they said, this mine has changed our lives. We now have houses and cars and opportunities that they didn't have before. And that's one thing I wanted to hit on. You guys have been doing this for so long that the community now has grown up around you, and they're so dependent upon you and also support you at the same time. So it's really been the symbiotic relationship with the locals there in Mexico.
Very much so. Yeah, and that's just kind of going to a little bit with the mining changes and laws recently. The locals have been very much on side with us, right? Because they don't want to see operations and tax regimes and permitting change us. I mean, we're fortunate we've been in production for so long that I think we've been grandfathered in, but we're still putting out what's called an imperil with many of our sector peers to really help the whole sector work out and stay relevant. It's a huge contribution to GDP. Like you said, it's completely transformed the local town of the �々𝑃𝑎n. We are easily the largest employer in the area with over 230 plus consultants and employees. So they don't want to see their livelihood change because of tax regimes and due to politics. And politics change every 4 years or every 6 years, as in many parts of the world. We've been here for 16, 17 years, and we've survived a few different regimes, as you can imagine, Rob. So we're here to stay.
Yeah, I believe so. All right. Thank you so much, Jerry, for hopping on. We'll have you on again to do an update on IMPEC, especially since I think the second half of the year is going to be a lot nicer to the precious metals market. So I expect you guys to do very well the last half of the year. But thank you for coming on, Jerry. We appreciate it.
Thanks for the time, Rob. Always a pleasure.
Absolutely. Sorry, one last question. So if people want to get access to your stock, you guys trade on multiple exchanges. Let's do that real quick before we sign off. Where can they find you?
Yes, good reminder. So on the TSX Venture, we're under IPT. That's Ian, Paul, Thomas. On the US OTC, we're on ISVLF. That's Ian, Sam, Victor, Larry, Frank.
Okay. Thank you so much, Jerry.
Thank you, Rob.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.